I'm Meg O'Neill, Woodside Energy's CEO and Managing Director. Today, we released our half-year 2022 results, and I want to spend a few minutes stepping you through what we have achieved during a half-year that has been truly transformative for the company. These are our first results as Woodside Energy, following completion of the merger with BHP's petroleum business. We are the largest energy company listed in Australia, and we now have secondary listings on the London Stock Exchange and the New York Stock Exchange. As you will see, the results reflect increased financial and operational strength delivered by our larger, geographically diverse portfolio of high-quality operating assets. Before I get into the details, I think it's important to reflect on the upheavals in global and Australian energy markets witnessed over the past year. Even before the Russian invasion of Ukraine, energy markets were increasingly tight. The conflict has exacerbated the supply-demand imbalance and has been a wake-up call about the importance of energy security and affordability as we progress on the path to net zero. At Woodside, our focus is on helping to respond to this global challenge by delivering reliable, affordable, and lower carbon energy today and into the future. First, I'll take you through our financial highlights. Our net profit after tax was an impressive $1.64 billion, an increase of 417% on the first half of 2021, driven by a 132% increase in operating revenue year on year. Underlying NPAT was $1.8 billion, up 414% on the first half of 2021. This is the highest half-year underlying NPAT we have ever recorded. We have also benefited from higher realized prices, which more than doubled year on year to $96.40 per barrel of oil equivalent across the expanded portfolio. But we are not the only ones who benefit from this outstanding result. Higher prices means higher profit, which allows us to fund our growth projects, such as Shenzi North, Sangomar, and Scarborough and Pluto Train 2. Higher profits also mean we pay more tax. We are proud to be making a significant contribution to the economy and the communities where we operate through our continued investment in existing operations and growth projects and through our tax payments. In fact, our tax expense was more than $1.2 billion in income tax and Australian petroleum resource rent tax during the half. Including royalties, excise, and other taxes, Woodside's total tax expense was almost $1.5 billion in the first 6 months of the year. Our shareholders will also benefit through an interim 2022 fully franked dividend of 109 US cents per share, the highest interim dividend declared since 2014. Now, let's take a look at our strong operational performance. Our operations teams have worked hard to deliver improved LNG reliability of 98.3%. Production for the half year was 19% higher at 54.9 million barrels of oil equivalent, benefiting from the contribution in the month of June from the former BHP assets and improved reliability at our LNG facilities. At Pluto, production was increased by the startup of Pyxis Hub and the commencement of gas flows through the interconnector pipeline to the Karratha gas plant. We increased production capacity at Bass Strait, enabling Woodside to supply as much gas as possible into the tight Eastern Australian domestic gas market. We successfully delivered the Greater Western Flank 3 and Julimar-Brunello Phase 2 projects in Australia, and the Shenzi subsea multi-phase pump project in the Gulf of Mexico. The Scarborough and Pluto Train 2 projects are now 18% complete, with all major equipment items procured, fabrication of the floating production unit and Pluto Train 2 construction works underway. The subsea trees for the initial development phase are complete, and pipeline manufacturing is well progressed. The Sangomar field development in Senegal is 63% complete, with dry dock activities for the FPSO conversion completed in the period, and the subsea installation campaign commencing in August. We are also progressing front-end engineering design activities for Trion and assessing development options for Calypso, Browse, and Sunrise. Finally, I want to talk about how we are pursuing lower carbon energy sources. Increased cash flows following the merger will provide Woodside with greater capacity to invest in new energy opportunities, enabling progress towards our target of investing $5 billion by 2030 in the new energy products and lower carbon services that our customers need. As an example of this, we are advancing plans for a self-contained hydrogen production, storage, and refueling station called the Hydrogen Refueler at H2 Perth, which will service local industry and the public. As you've heard, our new chapter as Woodside Energy is off to an exciting start.